Thanks a lot. Welcome everybody. Welcome to my webinar, broadcasting live from Mexico City. Today is Tuesday, January the 10th, 2017. This is me, myself, Alberto Alvarado. This is my YouTube channel. In any case that you're interested, you can look it under this iiivb Streaming Room channel in YouTube. Oh, the tunes. Yeah, I guess I forgot them. I forgot them. It's a lack of. It's pretty much more than 1 month. The last webinar I delivered, so I just forgot. Yeah, let's keep that tradition. From the next webinar on, I will be putting some very nice electro music tunes that you like the most, Kate. So how are you all? How is the new year going so far? I really wish you all that you enjoyed this year-ending celebration. For the ones that celebrate them in family or with friends, surrounded by the people that you care, that you love. I honestly hope that you enjoy them and that these celebrations brought to light the real good things and important things in life, because sometimes it's very easy to forget that fact. Overall, when one dedicate one work in the financial field, at times we just forget that. So I really wish you that you have a very terrific, good, super year-end, Christmas, in any case that you celebrate it, or at least any kind of celebration you have this year ending, and that you started this year with the best energy and the best expectations, with all the fuel and all the will of achieving your goals. If you have this traditional 12 desire list, wish list, always have it handy, so you can always remember during the year the things that you promised to yourself that you will do. So forget that. Irina said, I already forgot that we had a new year. Well, I can bet that you were working New Year, so maybe that could explain it. Feels like if it was so long ago, the New Year. Yeah, it's 10 days ago. Yeah, it feels like if that was last year. It was Saturday. Of course, I haven't. Well, who knows? When I started trading, I worked, so to speak. New Year, of course, not trading the markets, but learning them, studying them. So who knows? Maybe you did something like that. Who knows? But it's a good thing to know that you took a rest, because those days are maybe the ones that, in my opinion, the only 2 days in the year that are really quiet. December 25th and January 1st. Actually, I like a lot. This year I didn't do it, but I like a lot to go outside on January 1st, because all the streets are empty. So you can drive wherever you want. Everything is like, it's like a warp dimension. It's like if you were for a moment in a different dimension. It's a very, I like it a lot. But well, so honestly, in any case that you are listening this webinar live or recorded, and in any case that you are a complete beginner in this world, I have some news for you this year. You know that I like to be, or at least what I want to call, to be very honest. So maybe I won't tell and I won't say maybe what some people would like to hear, but I have, or at least I feel I have the responsibility to share the things as I understand them, even if it's not a good thing, or if it's not what one could expect. Okay? What can we expect for this year? Well, I have no idea. In my whole trading career, I believe that this is going to be one of the most difficult trading years in history. Because one raw fact, we have no idea what's next. We have no idea in 10 days Donald Trump will be oathing as president of the United States. And with that, it comes a confirmation that we have no idea what's next. We really don't know who this guy is, what he's up to, what he really wants, and what he's up to do just to get things done as he wants. So that will be reflected in the markets. Well, yeah, imagine here in Mexico we're having a lot of problems now, social unrest, distress, sorry. Yeah, it's not a good thing. Maybe it's not the best way to start New Year, but as I just said some minutes ago, 1 minute ago, I won't lie to anybody because this would be irresponsible. What's next? It's a very challenging thing, a very challenging scenario. We have no idea what's next, what this guy will do, and the consequences in the markets. I commented this before closing last year webinars that the constant this year will be called the volatility, but overall maybe having all the correlations, the current correlations broken, so maybe there won't be anything like a compass anymore. I mean, because at least before you had the absolute reference of the American dollar, for example. Well, I believe that's going to change this year. There will be currencies that, while maybe the euro dollar tanking, you could have maybe some other dollar asset tanking also, breaking a correlation. So we need to be and to have this very clear from the very beginning, because if you're starting your trading career, or even if you have some kind of experience already and you have a so-called edge developed already, and that's not going to work this year, and maybe for the next 4 or even 8 years. Everybody in the trading field, in the finance world, will have this year as challenging as I mean, I'm not old. I'm 37 years. So I cannot say that I know a lot on this, but at least in the last 11 years of trading, I am sure that this is going to be the toughest year for trading, and the next year, etc. So take it easy. Chill out. Don't rush into things. If you're just starting, maybe learning under these circumstances will be as difficult as trying to learn trading during the 2008 crisis. I can tell you that I proudly say now that during the 2008 crisis, well, even though I lost money, I survived it. So that's something that I proudly say, and I proudly say to somebody when I am asked about my trading career. But what I can tell you is that it's something that is very, very tough. It's not something that you like, because it's really having a challenge that you have no idea what's next. So this is the same thing. If you're starting your trading career, take it easy. Don't gamble. Don't try to believe that this is an easy thing. If you're a genius for trading, congratulations, because maybe you will harvest a lot of profits during this year. In any case that you are not a genius for trading, this will take you maybe the double effort, because now not only the beginners will have to adapt to a complete new world, but everybody, even if I have my edge already developed, I will have to adapt it to new circumstances. I learned that the hard way some years ago also, so this is not new for me. But when you are starting your trading career, or you're having your first rewards, don't be surprised that maybe in this time you will start seeing that what it used to work for you will quit working this year. Because today, this year, the word of the year will be fear, panic, instability, volatility, uncertainty, all those words that the markets don't like. And that, differently from the 2008 crisis, that you had a clear path, selling the stock market, buying dollars and selling everything else. This is not going to be the case. We will have a very different scenario now. So if you're learning, take from the very beginning, I'm telling you this, of this year, I would like to tell you that you will make it this year, that you will learn everything that you need to trade this year, and I would love to know it. But in any case, that you are a normal trader, a normal person with a normal learning curve, this year will take you double effort. So by no means, please, this year trade with borrowed money, with money of your credit card. No, don't trade with the urgency, with the need of money because you are in debt or with economic problems. No, this will take you time and effort, because there will be happening this year a lot of stuff that even the professionals will be like, what? Why that happen? And maybe they won't even bother to understand it, just get used to that, and that's it. So that's going to be the word of the year. The most likely thing is that Donald Trump, with all due respect to his voters, from the outside, the most likely thing is that at the end, after maybe 4 or 8 years, we will look back and it will be obvious why this billionaire didn't make it and didn't perform as well as other billionaires. It will be very clear that the reason why this billionaire didn't make it, didn't outperform other billionaires, all the contrary, will be reflected into his presidency. And at the end, it will be a bad result. I wouldn't be surprised, because some things that he's already doing. But the most likely thing is that at the very beginning, the very first results, the first 2, 3, even 4 years, maybe you could have an illusion of performing and healthy, even healthier United States economy. So it will be very difficult for the markets to gauge and to measure and to translate that into a price, when firstly you could have, for example, let's say, of course, if you create a lot of new jobs in a country, no matter what country it is, that will help the country's economy. But the problem is that if you don't have the solid foundations to sustain that during the next 8, 16 years, the first results will vanish in the future. That wouldn't be the first time that happens in the world. We have countless situations where you have, Mexico is one example. For example, in 1994, the president we had induced us and the world in trance where even everybody in the world thought that Mexico was going to be a miracle economy. Just to have 6 years later the, a massive devaluation and crisis, the worst so far. So it is not new. So why the markets are going to start behaving very differently? It's because it's very difficult to price in these two different realities that will coexist during one time, maybe 4 years, in parallel, while having good results at the beginning and knowing that those are not sustainable. So the price will be like, well, where do we go now? Do we reflect what is going to happen in 8 years, or we just reflect what is happening now? Because actually the idea of the markets is to anticipate things, not to stay behind a cure. The markets usually are or are meant to be before the cure, ahead of the cure. So in this case, this is a very unique situation that's going to be translated in volatility, in correlation breakups, and that is the most dangerous thing, because at least we have this United States dollar correlation, and no matter what, that was like the ancient sailormen in the dark, in the seas. They knew that they could look up to the sky, and with the stars, knowing where the north is and knowing exactly where they were moving and they were going. But that's not going to be real anymore. We're not going to have the United States dollar star in the sky, in the dark sky, while we are navigating in the middle of the night, in the middle of a giant sea. That's not going to be the case anymore. So take it easy. I commend you this because I received in December, after having the last webinar, I had the chance to meet again a good friend that I had during high school, and he approached me asking maybe for the possibility of being coached or having money managed by me, or learning quickly how to manage the money himself, because he was in the need of doing that. I had to be honest with him, and tell him, just forget about it. You're not under the real and good conditions to start even learning. And the first stage for learning is losing money. So you are not in a position because you are in a need, an economic need. And you don't learn trading while you are in an economic need. Because you need to be able to risk capital, to lose capital, to learn, that is going to be like your tuition, to learn, and after maybe 1-2 years, being able to start delivering profitable strategies. Of course, I didn't have to go any further because he was convinced quickly that, yeah, maybe he was not ready for jumping into the markets. But if I had to go even further, I would have told him this, that I'm telling you now. That even if you have the capital and if you have the time, now you need to have another kind of extra characteristic in your investing trading profile as a person. That is to really know these circumstances and to know if you really have the temper to cope with it. So what we're going to do this year during the webinars is try to, I would like to say, to be the compass, but that would be like very cocky or something, because I really don't know if that's going to be the role for me, or that these webinars could have this kind of role for you, to help you to have something to have a grip on, and to say, okay, I know that these webinars could work as a compass and let me know more or less where the things are going, because I don't even know what's next. Of course, I will try my best, but I'm just going to tell you this. I started this year, usually after New Year, I don't trade live accounts. Why? Because after New Year, in this very case, I quit formally trading the markets almost 1 month. So I said, okay, I will start with the trader contest accounts in Dukascopy, start trying to keep up with the markets, etc. Okay, I will tell you this. I had opened like, I don't know, maybe 30 trades, and I'm break even now. And I had a drawdown of 50%. Of course, this is over leveraging because of the characteristics of the trading contest. But the thing is that even people that have a lot of years trading, I'm not saying that all people need this kind of testing accounts, dummy accounts after New Year to trade, but I just simply didn't feel that the markets were telling me something that I could feel comfortable with and start trading from 0 to 100 at the very beginning of the year. So I can easily say yes, it was a good decision, because I know now that if I had started from in my live accounts directly, maybe I would have regret that, because maybe I wouldn't be performing correctly so far, and I don't want to start a year with that experience. So even for somebody that has 11 years trading the markets, it's taking his time to at least see what after Donald Trump oathing as president. I commented on December, the latest webinars, that I ideally wait for Donald Trump oathing as president and then start trading for real. So I decided just to start trading this dummy account, to start feeling again the sensations, that having that feel of the markets again. And I can tell you something, from the very beginning of this year, yes, a lot of things have changed in the way the markets behave. Why? I don't know. They simply feel different. I cannot explain why, but they simply feel different. They are not as I don't know how to say, not predictable, because the word is not predictable. The markets are never predictable 100%. But yeah, it's kind of strange. The markets are moving strange. I just can't explain it any further. I had the opportunity to check this latest non-farm payroll number in a website, very famous website where they deliver news, analysis, etc. How convinced a woman that delivered webinars there was to say that according to the latest data of the United States economy, the non-farm payroll number was supposed to be delivered. No, okay, there was another one. I don't comment because I don't want to this conflict of interest. I don't want to send people to check that site, because of course this is Dukascopy webinar. No, it is she delivers webinars in that site. It's a famous woman. Actually, she has a page where they coach, they sell trading signals, etc. But I was curious that she was very brave and convinced that since having soft data, the latest leading indicators by the American economy were softer than expected, she was sure that the non-farm payroll number was going to be softer. I really don't care about trying to guess the numbers, because but it made sense that maybe the non-farm payroll number was going to be weaker than expected, as it happened. But she was very sure to, let's use the word recommend, because she usually recommended that to short the American dollar versus the Swiss franc. So I went to the Swiss franc chart and I started doing serious analysis, and I was seeing the complete opposite potential reaction. So I was like, or I am just not getting, I don't know, keeping up with the markets, and maybe I am like seeing things that are not there. But for me, it's a clear buy, the dollar versus the Swiss franc. Even if we have this, what, another webinar? No, I'm not delivering any kind of other webinar. This woman is delivering webinars. So, well, the thing is that she was very sure that just because we were going to have a softer non-farm payroll number, it was a sure thing to short the dollar Swiss franc, and the reaction was the complete opposite. Even though the number was actually very soft. But the things that the markets, and I commented that like in mid last year, the non-farm payroll number is going to be gradually less and less important and leading indicator in the future. I commented that like in the mid last year. I started saying that. And well, this maybe was one of the first clear signals for me that this is actually happening. Yeah, the logic thing was to sell the dollar, but the markets reacted, at least in the dollar Swiss franc, clearly to the upside. After weekend, we almost had a 100 pip movement to the upside after non-farm payroll number. So I don't tend to trust people that sell signals and tell you buy this, sell this. I don't tend to believe to. I just like to have my own opinions on trading. But all the things when she analyzed why and the price reactions and why, they were very, very well founded. I mean, it sounded very plausible. But for some reason, the market were not telling me that. So I was like, this is strange. I mean, it's a complete divorce now from the fundamentals and how the market is reacting. And this is going to be the word of the game this year. We're going to get divorced from the fundamentals and how the markets behave. Why? Because the markets really don't know what their job is anymore. The markets are used to anticipate things in a certain time frame. But with Donald Trump economics, we really don't know what that time frame is anymore. So some markets will start reflecting the next 3 years, while other markets the next 10. So that is why we're going to start having this kind of very strange movements. I mean, the non-farm payroll number was soft enough to have a dollar sell-off, but we didn't have it. And it was soft enough. It was not deviated like a very tiny quantity. It was decently deviated to justify maybe at least a temporary dollar sell-off, and we didn't have it. So that is why this year is going to be tougher. Because at least in the long time frames, you could go and analyze the fundamental data and maybe try to find a common sense in what the markets ended up doing 2, 3, 4 in a 6-month period. But that's not going to happen anymore. It's going to be erratic, not only volatile, but erratic. And that is why we need to have your best ally this year for you is going to have a demo account. That is the truth. because having a demo account will give you this, will keep you away of having a lot of bad trades. I'm going to tell you something. I'm used to get trades wrong all the time. Yes, I'm used to that. But I can tell you that this year, the trades that I have opened in the trading contest, I used this trading account as like a preparation for my live trading. And I have seen that my success curve there changed. So that is keeping me like, this is getting serious. This is, the markets are actually changing. I cannot tell you that the market is wrong, etc., because there is no such thing as I was right but the market was wrong. No, that is not true. But usually under the usual circumstances last year, I would have already have more profitable trades so far. But that's not the case. So I am like, okay, maybe I am out of shape because 1 month I was away from the markets, or maybe the markets are just doing the most logical thing, not knowing what the hell to do. Because if we are sincere with ourselves, it's the first time that we have a professional bully as a president of the United States that uses extortion and bullying against worldwide enterprises, threatening them to what to do or not to do, where to invest or where not to invest. And that was good enough. Explicitly going against an international trade agreement, whether he likes it or not, is still active. With this speech, he demonstrated what he really thinks about the rule of law, that he doesn't respect it. And if it's not enough not to respect it, to use the threaten and the bully and the extortion. So those are some kind of very exotic tools that usually you don't see in a civilized democracy. You see that in primitive democracies, like for example in Philippines, you have a president saying that he's going to kill corrupts and that kind of radical things. You can expect that from Philippines, but having this kind of psychology from the guy that's going to rule the United States is something that it's simply exotic. You haven't seen that way. Usually the presidents in the United States, in the mature democracies, behave in a way that is called institutional. They stop being themselves and they understand that they are representing something that goes beyond themselves, beyond their own ideas, beyond their beliefs, that they represent an institution and they start behaving like institutional. But Donald Trump is showing to the world how non-institutional this guy is. So we have no experience in the recent history on how the markets can manage in their interest under such circumstances. Because while only, and this is something, it worth only a tweet by Donald Trump to Ford quit a billionaire investment in Mexico. It worth a tweet, just a tweet. That is new, because usually this doing business is about having word, honoring the word, having things written, having commitments, having it was supposed to not to be that easy just to quit an investment project. But what happened these latest days is showing to the world that actually you can have one thing that you can consider it for sure, and under Donald Trump administration, at the other day, 1 week, 1 month after, you could have the complete opposite. and that's it. That doesn't work to build up trust, to build up certainty. And the markets, the capital, look for certainty. Look where they can multiply itself the most. With this kind of switches, of course, honoring the differences, because I'm not going to compare Venezuela with the United States because it has nothing to do. But the same way Nicolás Maduro just increased 50% the minimum wage yesterday, just because he wanted it, like if it was a question of he wanting to increase the wage and determine the prices, is this kind of behavior. Just because I don't like something, I just threat. I just throw a threat, like a bully, and it worked. Usually the economies, we used to have a protocol to lead, to deal with this sort of things. And by the way, that protocol didn't include a tweet. There were formal ways to deal with that. Okay, so that is why what is next this year is a complete uncertainty thing. Imagine this. What we're going to see this year in the economic arena, financial arena, it is the same thing as being the first one in Mars. We really have no idea what's there, no matter if we have satellite images. The first colony in Mars will feel exactly the way the financial sector is feeling now. We are in uncharted territory. And this is the way it's going to be the next years, not only this one. It is maybe the sensation the first colonies in the United States felt when they started moving from east to west, to the so-called Wild West, having really no idea what's there. Okay, so this is actually becoming the Wild West era again in financials, because we really don't have an idea what's next, what's going to happen, the consequences. This is new, completely for everybody. And the more conscious you are of this fact during this year, this will save you a lot of frustration. Because this is not going to be the first time somebody that, well, like this woman that said and recommended this trade. I mean, being wrong in the market is the most common thing. So you cannot measure because somebody just missed or made a bad call in the markets, because that's usual. It's normal. But the thing is that you will start seeing that even the most informed ones are going to start having them wrong. And that will start changing, maybe having wrong, right, and maybe firstly it was wrong, the movement, but then it ended up moving in the way they anticipated, and that's going to be the rule of thumb. So I wanted to start this first webinar warning you this. The format of the webinars that I will start delivering this year will change to adapt to this fact. You know, for the ones that have followed me long enough, that I like a lot to talk about geopolitics, because I still do believe that geopolitics have a lot to do with how the trading world ends up moving. Overall, when you have the two superpowers, nuclear superpowers, confronting themselves and challenging themselves eye to eye, okay? But the truth is that, yeah, I would still recommend to anybody that is in the trading field that they need to keep up with all the kind of news that they can, and to be informed and to try to know the most of everything. But the truth is that if you're, for example, a scalper, well, it really doesn't matter that much geopolitics, right? So, attending that the new circumstances will be so erratic, so maybe volatile, that maybe not even being aware of geopolitics and fundamentals because of this divorce between the price and fundamentals, I will try to move on into what I haven't done so far in this webinar, that is trying to focus on shorter time frames. I explained at some moments that I didn't like to do that because if you go too way into a smaller time frames, I wouldn't be simply able to say anything about it because I would be so busy trading that I wouldn't have time to explain it. But the thing is that the circumstances, no matter how good you are in the fundamentals or in the geopolitical side, maybe that won't be enough to explain anything either. So, trying to anticipate that, I was trying to figure out this year's new format for the webinars. And it's try to focus to you know that I use the daily chart as a base for my analysis. Maybe this year I will try to focus more having the 1 hour chart as a base, or even the 30-minute charts, trying to find shorter time frame opportunity windows, because since everything is going, in my opinion, going to become erratic, there won't be such thing as long-term trades, because things could change just because Donald Trump threatens somebody in a way that spooks somebody. So we cannot consider trading anymore this year, at least in my opinion, unless we have hard evidence of the opposite, but we cannot continue trying to profit from longer time frame opportunities like 3 weeks, 4 weeks. No, I believe that was last year's style, not this one. Maybe the opportunities now will last 2 days, 3 days, and that's it. At least for us, for retail traders. Of course, I am not completely sure about it. This is only my idea, and I will work. And if I would rather to choose a longer time frame opportunity than a very short time frame one, yes. In any case, I find a longer time frame opportunities like the ones I like, of course I would prefer them. But I honestly don't think, because you can see it now. Yesterday we had again the markets getting spooked by having a hard Brexit again, while before year end the sentiment was a complete opposite, and 1 month before the complete opposite, and so on. So how you can trade something when you have this kind of opposite, very convinced emotions that change every month? So with Donald Trump, this is going to be only amplified, not only in the pound, but anywhere else. Donald Trump apparently is very good at creating new problems, because while he is very committed to solving the differences between the United States and Russia, he's already gained a lot of conflicts with China, with North Korea, with Iran. So that is not going to help, because it's a conflictive personality, and that's what's obvious for, at least for somebody that would like to analyze this guy objectively. Well, his style is conflictive. He has a conflictive personality, and the only thing that could save the United States was that he started behaving presidential and institutional. And I couldn't believe yesterday he got engaged into a tweeting war between an actress because he just didn't like what she said. It's like, oh my God, you're the president, you're going to be the next president. You need to behave institutional. So all this is confirming again that you could have maybe a major projection, let's say that the euro is going to recover economically. But it only takes that Donald Trump starts threatening all the enterprises that instead of investing in the this is the bully, the one that give me your money or I will hit you. In this case, is invest in my country or you will suffer. So this kind of speech is something that will hurt the longer term investments. And we need to be very, very aware that the real people that move the markets are the big guys, what they are called, so-called the big whales. Investment funds, for example, pension funds that move trillions of dollars, and they need to invest in foreseeable, stable instruments for the next 30 years. And with this kind of stuff, they won't have an idea where to put the money. And in the same moment they put it in, they can put it out. So that is why the volatility would exacerbate even more. Because if they see a potential 1 month opportunity, maybe they will try to invest it as to load the boat as heavy as possible, and the moment it expires, to remove it all from one snap, and that could move the market very widely. So this is the reason the real long-term investment funds, instruments, etc. won't find stability in the next years. And they move so much money, and they cannot just sit on their hands. And that is why the volatility is going to become erratic. It's going to be very difficult to differentiate between having a pure volatility, erraticness, that maybe the market has no idea what to do with information, where to go, if the information is divorcing from price action and vice versa, or if it was only a investment fund that just took massive profits or a massive loss. It's going to be very difficult. The word of the day, the word of the year, this year, is going to be having the famous flash crashes even more often. And that's something that us, as retail traders, could hit us badly. After the Swiss franc stopped defending the 1.2 price against the euro, suddenly it crashed more than 1,000 pips. That put in bankruptcy Alpari, the UK division of Alpari, one of the oldest brokers at that time. They just went bankrupt just because of that. And there were a lot of people that lost all their money because there's simply no stop loss that could avoid you to that. But these are the new risks. That, yeah, it's real. Maybe not that kind of flash crashes, but maybe suddenly having a 300, 400 pip against you movement just to see it come back. But in the meanwhile, your stop loss was triggered maybe 200 or 300 pips worse than where you put it, just to see the price come back. We need to start mentalizing that these are the new challenges. And that is why the learning curve is going to be even harder. I will try to do my best, of course, during this webinar, during this year, to try to anticipate maybe the most likely currency scenarios, time frames where that could happen. Because learning to measure and to gauge correctly the risks could actually help you to, instead of maybe risking 1% of your account, maybe the half of it or even less. But of course, when you are having a small account, even risking less could be like a desperate thing, because you will feel actually that you are losing cents, but winning. When you win, you're winning cents. But that's it. That's the way. That's the name of the game. We cannot change it. That's maybe gone forever. The bonanza before 2008 crisis, that you can actually buy what it was called a carry trade. You can buy pound versus Japanese yen, even closing your eyes, not even considering the price, and you could have the certainty that 1 month after, that trade was going to be widely in your favor. Those days are gone forever. And this year we're going to have the hard proof of that. That not even mastering and having a lot of experience, it is foreseeable what's next. So yeah, I know that maybe you hate me because I'm giving you all. I'm giving you all, but courage or the good vibes to trade, right? But this is the truth. Trading is this. Trading is being able to see the real world as it is. To be prepared for, you need to be prepared for the worst in order to expect the best. But in this case, being prepared for the worst includes massive drops, massive flash crashes, erraticness. Dukascopy has a very nice to deal with this when they perceive a bigger than average risk of, for example, they anticipated this Swiss franc thing. They just reduced the leverage in the euro Swiss franc. So maybe that's going to be a typical thing during the year. Maybe Dukascopy will say this and this and this instrument will be reduced in leverage. And some other trade brokerages, maybe they would do that also, etc. I don't know. But we need to be prepared that these trading circumstances are unique, and that requires unique adaptation. And so do we. We need to start seeing how to adapt to these very unique situations. Hopefully the information delivered here has some value for some of you, and maybe trying to migrate from longer time frames to smaller time frames could help us to keep up with trying to find opportunity windows, because there will be plenty of opportunities, I can tell you that, but are going to be very quick, very fast, and very volatile. So we need to be, as a newbie trader, or even as an intermediate mature trader, we tend to open trades after a big movement happens. Maybe to the upside, we wait for the retracement to maybe try to grab the next movement to the upside. But maybe this year this is over. You need to be able to be well ahead of the move. Once the move is gone, it's gone. Maybe you won't have a second leg to that direction. So hopefully the information here will help us, everybody, to anticipate, to be positioned in the most likely, not direction, but at least try to detect an opportunity window ahead of time, so you can plan your trade, assuming the risks. But I see it very difficult that this year will be characterized by having second chances to enter a big move. I see it very difficult. Maybe in the Mexican peso, yeah, because it's a sure thing that this is going to the Mexican peso to continue devaluating for the next maybe 2, 3, 4 years. But besides that, I see it very difficult. That maybe the opportunity windows will last more than 2 or 3 days. So I believe it's time to call it for a webinar today. I would like to thank everybody for showing up. It's a very, very good thing to be back. Thanks a lot, Katerina, for hosting, of course, for being around, for receiving me again this year. And remember that I plan to broadcast from Monday to Friday from 7 to 8 a.m. GMT time. So remember that I will be expecting you all here. Thank you everybody for showing up. Remember to treat safe, be safe. This is Alberto Alvarado, and bye bye.